Hello and thank you for joining us at xm.com. You're watching this Forex Preview video. We'll be having a look at UK data. I'm Christina Marujos, and joining me today is investment analyst Mario Sajgiriakos. We have a flurry of data, including GDP numbers for April out of the UK on Friday, but it appears that economic indicators aren't what move markets lately. We'll have a look at the pound in a bit, but before that, Marios, let's have a look at the data itself. April was the month which brought strict lockdowns and economic activity to a halt. Investors are bracing themselves for bad numbers, but how bad is Friday's GDP report expected to be?
Hello, Christina. Well, it's expected to be terrible. GDP is expected to have contracted by 18.4% just from the previous month. Now, in normal times, you would expect this to be very scary news for the pound. But like you highlighted already, these aren't normal times. The market is basically ignoring the data nowadays. And what's really moving the pound is risk sentiment. If you take a look at cable and put it into a chart with the S&P 500, for example, with a stock index, there's a pretty significant correlation. Now, part of that has to do with the dollar. The dollar has been acting like a safe haven during this crisis, so it tends to move inversely from stock markets. But the pound itself has also become more sensitive to risk sentiment, in my view. That probably has to do with the UK's external financing needs. The UK has a large current account deficit, which means that when the world enters a recession, it becomes much harder for it to get that financing from abroad, and that makes it more correlated to risk sentiment and how investors are feeling overall.
And speaking of the pound, we saw it gain a bit last week on the risk-on mood. However, it's now entering eerie waters, one would say, with Brexit coming back into the spotlight as the extension deadline is fast approaching at the end of June. The UK government has ruled out an extension. So how do you see the pound performing?
Well, here's the thing. It depends on whether or not you are looking at cable or euro dollar. So cable, I think, will be driven mainly by risk sentiment. And in order to predict how cable is going to do, therefore, you have to also predict the stock markets. And that is a very uncertain situation, I would say. But in a nutshell, we've seen a very strong rally in risk assets. So I would expect a period of consolidation or even a pullback, a downward correction in stock markets, which could also hurt cable a little bit. Now, the second leg of that is how Brexit will play out. And on that front, I'm not particularly optimistic. We've seen the latest round of the negotiations, and with very little progress, and the UK is digging its heels in and saying that we won't request an extension. That means that the markets will probably start to price in a Brexit risk premium, a no-deal Brexit back into the pound over the coming weeks as the rhetoric heats up. So I would expect the pound to stay under some pressure. Now, that I think will be more visible in euro sterling. I would say that euro sterling has more scope to rise, especially since the euro is getting its feet under it now that the EU is discussing a recovery fund.
Marius, thank you so much for your insights and for joining me today. And thank you for watching this Forex Preview here at xm.com.